Welcome to this video on The Most Important Thing by Howard Marks. We'll be covering 9 timeless takeaways on second-level thinking and risk from this renowned investor. Our first takeaway is on second-level thinking. While first-level thinking is simple, superior returns come from second-level thinking, seeing things others don't, or weighing them differently. Consensus insight yields only mediocre return. Takeaway 2. Understanding market efficiency and its limits. Markets are generally efficient, but humans are irrational. The skilled investor identifies specific pockets where efficiency breaks down to exploit opportunities, recognizing that emotional markets can be very wrong. Takeaway 3 highlights that value is the foundation. Every investment must be anchored by an estimate of intrinsic value. Value investing is the only rational basis for making decisions, as price only has meaning relative to value. Takeaway 4. The relationship between price and value. The goal is to buy assets well. Investment returns are determined by the gap between what you pay and what you get, not asset quality alone. Our fifth takeaway is understanding risk. Risk is the probability of permanent loss of capital, and it is largely unknowable in advance. Marx argues that risk is highest when it is least feared, often when prices are high and markets are calm. Takeaway 6. Recognizing and controlling risk. Since risk cannot be measured precisely, manage it through behavior. This includes avoiding overconcentration, insisting on a margin of safety, and avoiding complacency from past gains. Takeaway 7 is the pendulum of market psychology. Markets swing between greed and fear, euphoria and depression. The skilled investor understands where the pendulum currently sits and bets on the inevitable swing back. This is simple in concept, but difficult in practice. Takeaway 8. Contrarianism and consensus. To beat the market, you must think differently and be right. Successful contrarianism requires identifying when consensus is wrong, plus the conviction and patience to wait for the correction to occur. Our final takeaway is about knowing what you don't know. Great investors have superior risk management in the face of uncertainty. The goal is not to be right, but to avoid being catastrophically wrong when surprised by the world. The Marx bottom line is clear. Think second level, know what you don't know, and remember that risk is greatest when it feels safest. Humility and patience are your real edge.